What's up, Autonio traders? Today we are going to be talking about all of these indicators and what their functions are. So let's get right into it. The first one is the Accumulated Distribution Line, or ADL, which was essentially designed to measure the underlying supply and demand of an asset. The ADL attempts to determine whether traders are actually accumulating, meaning buying up the asset, or if they're distributing, meaning selling off the asset. And it does this by finding divergences between the token's price and the actual volume flow coming in. When the ADL moves in the same direction as our price action, that is a confirmation of a trend. So if we look at the chart for Bitcoin, you can see that on February 5th, we had a very strong downtrend, which was confirmed by the ADL with downward movement. And you can see now the trend is pretty weak as it's not moving in exactly the same direction as Bitcoin. And next up we have ADX, or the Average Direction Index. Now this measures the strength of a trend. The stronger the correlation of the ADX, the more confirmation of the trend, and the more divergences, the weaker the trend. You can see that we had a really strong trend developing in early February with an ADX score going up to 45, which is incredibly high. Anything over 30 is considered a very strong trend. Anything below that is pretty weak. So now we can see as Bitcoin moves sideways, we have an ADX score of about 15. Next up, we have the average true range, which measures the degree of price volatility by averaging prices from a previous time period. This indicator helps Autonio pick good entry points. So let's take a look at the average true range of Bitcoin right now. And we can see that on the hour, the ATR is 150, meaning that every hour we're moving about $150 up or down in price. And next up we have Bollinger Bands. Now Bollinger Bands are one of the most reliable and effective trading indicators that we have to choose from here. They can be used to read trend strength, to time entries during range markets, and to find potential market tops. A Bollinger Band is a line that's plotted 2 standard deviations away from the simple moving average of an asset. The Bollinger Bands consists of a center line and 2 price channels above and below it. The center line is the exponential moving average, and the price channels are the standard deviations of the token being studied. Let's take a look at the Bollinger Bands for Bitcoin right now. Now you can see as the price action gets steep and it gets super volatile, we see an expansion here, and as the price action gets more narrow, we see a little bit of a contraction in the bands. Many traders believe that the closer the prices move toward the upper band, the more overbought the market is, and the closer the prices move toward the lower band, the more oversold the market is. Next up we have the Commodity Channel Index, or the CCI. Now this is a versatile indicator that can be used to identify a new trend or warn of extreme conditions of being overbought or oversold. In general, the CCI measures the current price level relative to an average price level over a given period of time. And the CCI is relatively high when prices are far above the average, and the CCI is relatively low when prices are far below the average. So let's take a look at Bitcoin's CCI right now. And what we're looking for are times when the CCI is well above 100 right here, or well below negative 100 down here. So when we see it come way above 100 and then start to turn down, that's a great sell signal. And when we see it way below negative 100 and it starts to turn up, that's a great buy signal. So Bitcoin's in its safe zone right now, so it's not giving us any signal to buy or sell, but it looks like it's a good time to hold since this appears to be moving upward. Next up, we have the Force Index, or FI. The Force Index uses both price and volume to measure buying and selling pressure. The price portion covers the trend, while the volume portion determines the intensity. At its most basic, chartists can use the long-term Force Index to confirm the underlying trend. The bulls have the edge when the 100-day Force Index is positive, and the bears have the edge when the 100-day Force Index is negative. And armed with this information, traders can then look for short-term setups in harmony with the larger trend, such as bullish setups in a larger uptrend or bearish setups within a larger downtrend. The Force Index can be used to reinforce the overall trend that we identify, or it can foreshadow reversals with divergences. There are 3 essential elements to a token's price movement. We have direction, extent, and volume. The Force Index combines all 3 of these as an oscillator that fluctuates in positive and negative territory as the balance of power shifts. In simpler terms, the Force Index rises above 0 in bullish conditions and falls below 0 in bearish conditions. No Sure Thing is a 2-line indicator used to determine momentum in token trends. As an oscillator, it fluctuates above and below 0, providing trading signals and analytical insight based on divergence with price and KST and single line crossovers. Buy signals will occur when the KST crosses above the 0 line or when the KST crosses above its signal line. The sell signals occur when the KST crosses below the zero line or when the KST crosses below the signal line. When the KST stays above during an uptrend, it confirms the trend, and when KST stays below during a downtrend, it confirms the downtrend. All right, let's take a look at Bitcoin's KST. So there are two things we're really looking for. The first one is divergences. So Bitcoin doesn't really have these, but divergences are where the price action is moving in the opposite direction of the KST. And a bullish divergence is when the price is falling but KST is rising, and this indicates that the price will rise shortly after. And a bearish divergence is when the price is rising but KST is falling, and that indicates the opposite, which is that the price will fall after. Now the other thing we're looking for are crossovers, and luckily we have a few of those here. And you can see that when the green line passes over the red, we have a bullish crossover, and this usually indicates that the price is going to move upward. And then a bearish crossover is when the red line crosses over the green, and we can expect to see prices move downward. Next up, we have the moving average convergence divergence, also known as the MACD or the MACD. And this is a trend following momentum indicator that shows the relationship between two moving averages of prices. The MACD is calculated by subtracting the 26-day exponential moving average, or the EMA, from the 12-day EMA. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD, functioning as a trigger for buy and sell signals. And this is easiest to understand when you're really looking at it. So let's pull up Bitcoin's MACD. So this blue line here is our actual MACD, and the orange line is our signal line. So when we see the signal line cross over the MACD, this is a bearish trend, and when we see it cross underneath the MACD, this is a bullish trend. Now the other thing we can look for is zero line crossovers. So when we see MACD come down below zero here, that is a bearish crossover, and when we see the MACD rise above zero, we have a bullish crossover. Next up, we have the on-balance volume, also known as the OBV, which is used to measure positive and negative volume flow of an asset. Chartists can look for divergences between OBV price to determine the price movements, or to use OBV to confirm price trends. There are three rules implemented when calculating the OBV. First, if today's closing price is higher than yesterday's, then the current OBV equals the previous OBV plus today's volume. If today's closing price is lower than yesterday's, then the current OBV equals the previous OBV minus today's volume. If today's closing price equals yesterday's closing price, then the current OBV equals our previous OBV. So OBV typically moves in the same direction as the price, which will confirm a trend, but as we can see right now, Bitcoin is moving slightly up in price while the OBV is moving slightly downward. So this suggests that Bitcoin might actually continue being bearish in the coming days, because upward price movement isn't sustainable while volume is coming out. And next up, we have the parabolic stop and reverse, or the PSAR. And the PSAR is an indicator that forms a parabola composed of small dots that are either above or below the trading price. So let me pull up the Bitcoin chart, and you can see here we have PSAR below and PSAR above. When the parabola is below the asset price, it acts as a support and a trail stop area while indicating bullish uptrending price action. When the asset price falls below a single dot, then a stop loss trigger forms. The parabola will then start to trend down as it trades above the asset price, indicating a resistance level accompanied by bearish price action. Traders can use the upper parabola break as a buy cover or buy long trigger. Now the PSAR isn't too great on its own. It should be used in conjunction with other indicators like stochastics and candlesticks and moving averages or others to help it pinpoint more accurate entry and exit points. And that is it for this video. We'll be covering the next half of the indicators, starting with rate of change in our next video, so stay tuned for that. And as always, if you have more questions for us, join the community on Telegram at t.me/Autonio. I hope you guys found this helpful, and happy trading.